G'day, I'm Scott Phillips from the Motley Fool, and welcome to Motley Fool Stocks in Focus. Now, this is where we look at a company that's widely owned, in the news, maybe all of the above, and particularly in this case, I think that's probably relevant, certainly very, very topical, both politically and economically. And to do it, I'm going to introduce Motley Fool analyst Vincent Wales. Vincent, g'day.
Morning, Scott. How are you?
Mate, I'm very well, thank you very much. We're going to talk about a company called Arafura Rare Earths. ARU is the code. Rare Earths have definitely been in the news recently. Just give us the lowdown, mate. What is Arafura? What does it do?
So, Arafura is a rare earths company. It's one of the larger ones outside of China, and it's developing a rare earth, primarily an rare earth called NdPr. Stands for, just check this, neodymium praseodymium. I'm sure somebody's going to correct me on that.
Yeah.
But it's one of the rare earths that's used a lot in the energy transition, technology, basically a lot of things. You don't need a lot of it, but you do actually need it. It's got strong strategic interest now. People have read that the security of rare earths is getting more and more important, not just the cheapness of it. So there's a lot of interest in Australia, the US, the EU, that kind of area. Now, it's still it's got a lot of interest from companies as well, major blue chip companies like Hyundai, Siemens. But currently, it's still progressing funding and construction at the moment to deliver this rare earth sustainably. So a few pros and cons, perhaps, around the company. It's got this large, long life asset in the Northern Territory, as mentioned, called the Nolans Project, which is supported by governments. It's got government funding as well to help this bring these developments online. Pricing leverage, because there's a shortage of this NdPr at the moment, there's going to be a squeeze. So that if that continues, that will affect the cash streams of the company. It's got high operating leverage. Obviously, there's a lot of capital intensive development prior to production. And when the production goes through, that should see a large increase in free cash flow. Now, the cons, it's pre-revenue, which is code for making a loss, obviously, at the moment.
Not even selling it. That's all right.
And like a lot of commodity companies, there's significant execution risk. Just because the tests in the ground have proved positive, that's no guarantee that those resources are as good further down. There's a lot of elements of uncertainty in it. It's very capital intensive. We've found the thing, but now you've got to build up the infrastructure, which is going at the moment, before you even start producing the actual rare earth. Prices are very volatile in rare earths at the moment. They're all over the place. So that makes it very hard to predict what the profitability is going to be over the medium and long term. There's a long development pipeline. As I mentioned, it's still not in production at the moment. Like a lot of commodity companies, it's more difficult to value than perhaps an operational company, because you actually need to take a macro view as well. You need to take a view what you think the commodity, the rare earth, is going to be worth over a series, over your investment horizon, which is notoriously difficult to do. On top of that as well, you've got the company-specific risks, management, are they able to execute and all that. And you've got to get everything right for it to be a real kind of winner. So risk mitigation, obviously, in industries like this, is to spread your risk in a basket of perhaps rare earth companies and that, rather than fix your investment on one specific company like Arafura, because high risk, high reward, but you're putting all your eggs in one basket. So.
Fair enough. I am going to hold your feet to the fire, though, mate. I ask every analyst during we do the Stocks in Focus videos whether or not they think it might beat the market. But before I do, I'm going to give our usual disclaimer because it's really important. Make sure we're only giving you general advice here on this video or this podcast feed, depending on whether you're listening or watching. That means that we can tell you what we think, not what you personally should do. Feels like an artificial difference, but it's really, really not. A financial advisor who gives you personal advice finds out about you, your goals, your objectives, your needs, your interests, what you're looking for. We don't do any of that. So we can't and we'll never give you personal advice. We'll only say, hey, here's our general view about an investment. So that's really important. Second thing, we're recording this early December. Vincent's, or 2025, by the way, if you're watching this some other year. Vincent's already mentioned this is going to be super volatile. So we don't know what news will break, what prices will change, what will happen from here. So we're giving you a view at a point in time. That, by the way, is not an excuse if things go badly or go well. We're just saying that's what's going on. We may change our minds in a year's time, a month's time, a day's time, or maybe we don't change the view for 10 years. Maybe this thing is whatever Vincent thinks. I haven't asked him yet. May be the case for the next decade. So just be mindful that everything changes. And as it does, we have to reassess our investment, what we do at the Motley Fool in general. As new circumstances come to light, we change our perspective, our view. We may even change our recommendations. So this is not a formal recommendation, by the way. This is just Vincent's view. Not that it's worth any less, but the Motley Fool has premium services. We sell memberships to those services and we give you our specific and formal advice about certain companies. This is just a chance for us to talk about a business in out from behind the paywall and let you know what we think. So that's a big preamble. With all that said, Vincent, and given how notoriously difficult it is, as you've already mentioned, what do you reckon? Does Arafura beat the market over the next 5 years, or does it lag the ASX?
Well, this is, as mentioned before, this is what you call like high risk, potential high reward investments.
Yes.
It's going back to what I said before. You've got to get a lot of things right. You've got to get you've got to be a commodity expert in predicting macro prices of commodities, and also a company analyst expert as well at the management level. How are they producing? Are they meeting their targets and executing on strategy? Because of that, I personally think the risks outweigh the potential benefits, given the fact there are other ways that you can get exposure to rare earths. For example, you could take you could diversify your specific company risk by buying a basket of rare earth companies, or there are ETFs now that specialize in rare earths, global exposure to rare earths. Because of that, it could do very well, but there's a lot of dice rolling involved. You've got to get everything right. You've got to make sure everything's right in this. A lot of dice rolling. So I'm going to say this is a casino bet, more in that. It's just too difficult to say how this individual company will fare over a normal investment horizon, 5 years plus.
Love it, mate. Thank you. More a lotto ticket than a fundamentals-based approach to this one, because you just don't know what will happen with all those factors, as you've already highlighted. Vincent, thanks for sharing Arafura resources, or rare earths. It used to be called resources. They put rare earths in the name, I assume, because it's sexier and people like it more. I don't know. We'll find out from them. In any case, thanks for doing a review of Arafura. ARU is the code. If you want to look at it here at home. In the meantime, thanks for watching. Thanks for listening. Check out the other platforms. If you're on YouTube, go and check out the podcast feed. If you're on the podcast feed, jump on YouTube. Motley Fool Money is the podcast. The Motley Fool Australia is our YouTube channel. Just go to youtube.com/FoolAU. You'll find a weekly Stocks in Focus. We do Stock of the Month. We do What I've Been Reading. In fact, Stock of the Month due out this week if we can get it done. So one of the teams a bit crooked at the moment. But if we get it done, make sure you subscribe to the podcast, the YouTube feed. That's the only place we do Stock of the Month out from behind the paywall. So jump on there, have a look, and see what else, other good stuff we've got on the YouTube channel as well as the podcast feed. Until we speak again, thanks for watching. Thanks for listening. And Fool on.